Hi, Rudy Martin here, filling in for Tony Sagami. The news wires are full of cruise ship stories. Carnival Cruises' Splendor, disabled since Monday by an engine fire, was towed into San Diego Bay on Thursday. Royal Caribbean's Allure of the Seas, the biggest cruise ship in the world, just made her U.S. debut just down the coast here in Fort Lauderdale a couple of days ago. Get this, the ship is 4 football fields long, 16 passenger decks high, and features a tree-lined park, Starbucks coffee, and a 3D movie theater. This evening it will be joined by sister ship Oasis of the Seas for a one-of-a-kind visual of the world's largest ships together for the first time. So why is so much attention being paid to the big cruise ships? Well, for one, the industry is growing. Since 1990, the average passenger growth rate has been about 7% per year, making the industry very attractive to investors. The earnings fundamentals are positive, and cabins are filled to capacity on most voyages. To meet this demand, the industry is spending $14 billion in new investments on 24 new ships in the next 2 years. That's on top of the $5 billion they spent last year, and it amounts to a 26% increase in capacity. But this is still a young, concentrated industry with 3 companies dominating almost 90% of the business. Carnival has 51% of the beds, Royal Caribbean has 26%, and Norwegian has 10%. Now here's the investing angle. Carnival Cruise Lines, ticker symbol CCL, is a $35 billion market cap stock trading at a very reasonable 17 times earnings. About 50% of its revenues are North American based, which means the rest comes from international markets. And the stock is trading at $43 and has a $50 consensus target price. Royal Caribbean Cruises, ticker symbol RCL, is a smaller but still very large to me $9 billion stock trading at 20 times earnings. Its consensus target price is about 20% higher than its current stock price. RCL also made news recently when it reported much better than expected earnings and boosted its earnings guidance by 10 to 15% more for next year. The final piece of good news comes from Norwegian, which filed with the SEC for a $250 million IPO after reporting a 23% annual increase in cash flow. That one should be a hot one when it comes out in 2011. And on top of that, it's not just Americans that love cruises. Globalization is the biggest trend in cruising right now, and the company's new megaships are drawing 25 to 30% of their passengers from overseas. This means that as the US dollar drops, you should see a major pickup in cruise line stocks. Now that's uncommon wisdom. Thanks for watching.